You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 21st day of June, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Michael will not be joining us on the afternoon broadcast today. He had to be checked out of his hotel room early. We did, however, do some live trading on the TradingView platform this morning, so hopefully you caught that. And as far as I know, we'll be back to our regular schedule as soon as tomorrow. Now, we do 2 live broadcasts every trading day. The first live broadcast is 9:30 a.m. to 11:30 a.m. Eastern. That's our live training room. However, that is reserved for members only and those who are taking their 1-week free trial. If you've never taken your 1-week free trial, you can do so by going to mytradingiq.com. At the top of the page, there's a link that says 5-day free trial. Pretty simple. Click the button. It doesn't matter what day of the week or weekend or hour of the day that you register for the trial. Your trial will begin the following day, and you will get 5 consecutive trading days, even if it stretches over a weekend. So don't have to worry about that. You will get 5 consecutive trading days and at no cost to you. There's no credit card required. Don't need your mother's maiden name. Any of that stuff. Before we ask you to invest in yourself as a trader, first we want to give you the opportunity at our expense to actually use our platform, use our indicators, participate in the group training every day, have a one-on-one mentoring session or 2, use our indicators, get our alerts, both the logic, the concierge, truly everything a trader needs, all under one roof, one low price. And the only way to get your indicators turned on TradingView is to take the free trial. mytradingiq.com, top of the page, 5-day free trial. Just when you click that, make sure you fill out all the information, especially your TradingView ID, so that we can get your indicators turned on for the purpose of the trial. Once you become a lifetime member, then you have lifetime ownership of the indicators. Now, I said we do 2 live broadcasts every trading day. This would be number 2, which is open to the public. It's everybody everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways to join the afternoon broadcast. The best way, because you only have to do it once, is just go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. What will happen is going forward every trading day, you'll get an email about an hour before the afternoon broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email, and that will automatically log you into our platform, where you will have access to the question box so that you can ask questions and participate in the discussion. I have too many things going on to monitor the chat on YouTube, even though we're streaming live there right now. If you want to be able to ask questions and, again, participate in the discussion, then do what I just said. Okay? Now, there'll be days that you're out of the office, away from the desktop, but you still want to join the afternoon broadcast live. There'll also be days when you're just plain out busy and you can't make it live, but you'd like to enjoy it at some later point in the day, following day, whatever. The solution to both scenarios is the same. Point your browser to our YouTube channel. It's real easy to remember. You already know youtube.com. Just remember /CFRN. Easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. And for those who are new to the world of CFRN, it's a great way to get to know who we really are. Anybody can say or do anything today, but what about a week ago, or 6 weeks ago, or 6 months, a year, 2 years ago, even more? Thanks to YouTube, you can find out. All you have to do is go to youtube.com/CFRN and scroll back as far as you like. Pick any day at random, and you don't even have to watch the entire broadcast, but do fast forward to the part where Michael does the recap of the live training room, and then fast forward to the part where I do the recap of the Logic 247 alerts and the Concierge Trade alerts. If you will do that, you'll quickly see the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast. youtube.com/CFRN. Now, start out with a word of prayer as we do every day. Now, we're going to go over some scriptures first. This is the third day of this particular topic. Overcoming money worries with prayer. Sometimes we don't know what to pray. Well, the good news is you can always pray God's word. I mean, it's His word, and when you pray it back to Him, that just might get His attention. Your prayers always get His attention, but when He hears His own words echoed back, Matthew 6:33. We're going to go through several scriptures today, and I'll be sharing all of them from the Message translation. Matthew 6:33 says, "If God gives such attention to the appearance of wildflowers, most of which are never even seen, don't you think He'll attend to you, take pride in you, do His best for you?" What I'm trying to do here is to get you to relax, not to be so preoccupied with getting, so you can respond to God's giving. People who don't know God and the way he works fuss over these things. But you know both God and how he works. Steep your life in God reality, God initiative, God provisions. Don't worry about missing out. You'll find all your everyday human concerns will be met. Proverbs 30, verse 8. And then he prayed, God, I'm asking for two things before I die. Don't refuse me. Banish lies from my lips and liars from my presence. Give me enough food to live on, neither too much nor too little. If I'm too full, I might get independent, saying, God, who needs him? If I'm poor, I might steal and dishonor the name of my God. 1 Timothy 6:6. A devout life does bring wealth, but it's the rich simplicity of being yourself before God. Since we entered the world penniless and will leave it penniless, if we have bread on the table and shoes on our feet, that's enough. Now, that scripture's not saying you shouldn't reach for the stars, but it's about being content wherever you are with whatever you have. Philippians chapter 4, verses 10 through 14. I'm glad in God, far happier than you would ever guess. Happy that you're again showing such strong concern for me. Not that you ever quit praying and thinking about me. You just had no chance to show it. Actually, I don't have a sense of needing anything personally. I've learned by now to be quite content, whatever my circumstances. I'm just as happy with little as with much as with little. I found the recipe for being happy, whether full or hungry, hands full or hands empty. Whatever I have, wherever I am, I can make it through anything in the one who makes me who I am. I don't mean that your help didn't mean a lot to me. It did. It was a beautiful thing that you came alongside me in my troubles. Of course, that was from the letter Paul wrote to the church at Philippi. Proverbs 27:20. Hell has a voracious appetite and just never quits. So, contentment is essentially a state of gratitude and appreciation for what you and I have, rather than a continual pursuit of what we don't have. And from a spiritual perspective, it's also a spiritual discipline or virtue. It's a conscious decision to be satisfied with what God has provided and a commitment to finding joy and peace in God's presence, regardless of our external circumstances. And the truth is, contentment plays a vital role in maintaining mental health, improving relationships, and fostering a positive outlook on life. It tempers our desires, curbs greed, and promotes a sense of peace and well-being. So today, I hope you'll meditate on those verses that I shared with you And I hope you'll join me now in a word of prayer. Heavenly Father, we thank you for the strength you give us in every circumstance. We recognize that true contentment comes not from worldly wealth, but from a deep and abiding relationship with you. Help us, Lord, to cultivate a spirit of contentment, irrespective of whether we are in need or whether we have plenty. Guide us to focus our heart not on the accumulation of wealth, but on godliness and righteousness. Seek ye first the kingdom of God and his righteousness, and everything else just lines up. We pray, God, that you would remind us daily of your promise, that you would never leave or forsake us. And let this assurance instill in us a sense of peace and contentment. Teach us to rely on you for our daily bread, trusting in your provision rather than striving for self-sufficiency. May we always seek first your kingdom and your righteousness, confident that all of our necessary needs will be met. Help us to remember that real wealth comes from godliness, accompanied by contentment. In times of abundance, remind us that everything we have is a blessing from you. And in times of scarcity, remind us of your steadfast love and provision. In all circumstances, we pray for a heart filled with gratitude, a mind at peace, and a life that reflects our trust in you. Help us to cultivate contentment as a testament to our faith in you. May our very lives be a testament to your faithfulness. We pray all these things in the powerful name of Jesus. And everybody said, Amen. All right. Let me give you the numbers here from around the world. Now, those of you that are tuned in via the YouTube channel, you already know the title of today's broadcast. How do politics influence market behavior? So we're going to talk about that in just a minute, as soon as I give you the numbers. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is up 10 points. The NASDAQ is down 143. It's over 1%. S&P 500 is down 14. The Russell 2000 is down 4. In the commodity basket, crude oil up $1.48, trading 72.66 last. That's a gain of over 2%. And we talked a week ago Monday about the fact that we thought crude had reached a point where it was going to reverse and head higher. And it has past week and a half. And I'll show you that when we go to the charts. Gold down $4.20, trading 19.43 last. Silver, tough week for silver, man. Down 44 cents. That's almost 2%. Trading 22.78 last. Now, That's worth roughly $2,500 per futures contract traded. In the Asian markets at the close, the Nikkei posted a gain of 186 points. The Shanghai dropped 42, and for the Shanghai, that's a drop of over 1.25%. The Hang Seng fell 388 points, which is just shy of 2%. And in the European markets at the close, FTSE down 10, DAX down 88, CAC down 33. So that gave us a mixed day in Asia, only due to the Nikkei. It was a red day for the UK, and at the moment, it is a mixed Radio Wednesday here in the US of A. The Dow is now positive by 18 points, which is not much for the Dow. The NASDAQ, S&P, Russell, still deeply in the red. The Russell not so bad, down 3.5 points, but red nonetheless. So we got two green spots at the moment on the charts, the world charts. The Nikkei finished the session positive, and currently the Dow is in the green. Everything else is red. Mixed day in Asia, red day in the UK, mixed day here in the US. So, politics. Politics and religion, the two things you never want to talk about at Thanksgiving dinner, right? Somebody's going to get mad, somebody's going to storm off. But I don't want to have that kind of a political talk. I want to talk about the influence of politics on market behavior. Politics and economics are two intertwined spheres that shape the dynamics of nations and their markets. The decisions made by political leaders, government policies, and geopolitical events have a profound impact on market behavior. From changes in fiscal policies to shifts in regulatory framework and international trade disputes, politics can significantly influence the direction and volatility of financial markets. So we're going to talk a little bit about the relationship between politics and market behavior, and try to explore the extent of political influence and its implications. Number one of the primary ways that politics influences market behavior is through fiscal policies and government spending. Now, you got to remember, the money the government spends comes from two places. Well, literally it all comes from the taxpayer. But the Fed, when they crank up the machine, print the money, well, who has to foot that bill? It's the taxpayer. So, government decisions regarding taxation, public expenditure, and budget deficits can have significant effects on economic growth, inflation, and market sentiment. For instance, expansionary fiscal policies, such as tax cuts or increased infrastructure spending, can stimulate economic activity, boost corporate profits, and drive up stock prices. On the other hand, austerity measures or higher taxes may dampen consumer spending, reduce business investments, and result in market downturns. We all know we've been in a downturn for well over a year. I mean, the market's trying to climb a wall of worry. It's having a tough time. You'll see that when we go to the charts. Number 2, political influence can also be observed in the realm of monetary policy, primarily through the actions of central banks. Now, Thomas Jefferson warned us a couple hundred years ago that if we ever wanted to destroy America, we should create a central bank. Actually, he was saying, do not, whatever you do, create a central bank. And what did we go and do? Well, we all know the answer to that. In fact, he was speaking this morning. It was the, I think, annual monetary policy speech or something. See, central banks operate independently, especially the Fed, which is not part of the federal government. It's as much a part of the federal government as it is as Federal Express is. It's a privately owned corporation. But that's a talk for another day. A talk we've had many times on this broadcast. Central banks are responsible for managing interest rates, controlling the money supply, and maintaining price stability. How would you rate our current central bank on those 3 things? However, political pressure can sometimes influence central bank decisions. Political leaders might advocate for accommodative monetary policies to stimulate economic growth ahead of elections, or push for tighter policies to curb inflationary pressures. These actions can have immediate impacts on market behavior, affecting borrowing costs, currency exchange rates, and investor sentiment. Number 3, political decisions regarding regulatory frameworks play a crucial role in shaping market behavior. Governments enact laws and regulations to protect investors, ensure fair competition, and maintain market stability. Changes in regulations, such as financial reporting standards, corporate governance guidance, or industry-specific rules, can significantly impact market participants. Now, who made billions of dollars when our government told us that everybody had to be vaccinated? I'm not calling any names, but I think you know. Billions upon billions because of a decision made by the government. I don't make the news, just reporting it. Political shifts, such as a change in party leadership or policy direction, may lead to alterations in regulatory frameworks, causing market uncertainties and affecting investor confidence. Number 4, geopolitical events and trade policies have increasingly become influential factors in market behavior. Political conflicts, international trade disputes, and geopolitical tensions can disrupt supply chains, impose tariffs, and create uncertainties that reverberate through global markets. For example, the trade war between the United States and China in recent years resulted in heightened market volatility and affected the fortunes of numerous industries. Investors closely monitor political developments and geopolitical risks, as they can significantly impact corporate profits, international investments, and overall market sentiment. Number 5, Politics can exert a powerful influence on investor confidence and market sentiment. Political stability, policy predictability, and the perception of strong governance are crucial factors that shape investor sentiment. Positive political developments, such as successful policy reforms or peaceful transitions of power, can boost market confidence, attract investments, and drive market rallies. Conversely, political instability, corruption scandals, or unexpected policy shifts can erode investor trust, trigger capital outflows, and lead to market sell-offs. Robert says he has no audio. Does anyone else have no audio? Anybody home? Oh, you got it, Robert? Okay, good. Well, thanks very much for letting me know, and I'm certainly happy you got it fixed. Neil says, "I hear you in Utah." All right. Well, I'm yelling as loud as I can. I'll never forget when I was a kid. My grandmother. First, my grandparents had the same phone number their whole life. I still remember it. 404-595-2490. And my other grandparents was 602-595-4910. But anyway, I realized the other day I've had my same telephone number since 1996. So that's 27 years? Man, time flies when you're making phone calls, I guess. Okay. Oh, when you get old, this will happen to you too. So, the reason I brought up my grandparents and the telephone, this is back when the telephone weighed like 20 pounds. It was black and had a rotary dial, and you could hurt somebody with one of those things. But I remember my grandmother, when somebody would have to make an international call or even an out-of-state call. I mean, long distance actually used to cost money. I mean, there's many in our society today that don't even understand that concept because they were born, after the advent of the cell phone or even the iPhone. And, calling Idaho is no different than calling your neighbor across the street. And because of the internet, you can talk to people all over the world using Telegram, which all of our lifetime members use. You can make phone calls to China for free. But what was funny was that my grandmother, I think it was when my dad was in the military, when he was in the Navy, and he would call home. I remember my grandmother going, "Shh, it's long distance," or "Shh, it's overseas." Okay, maybe you had to be there to get the joke, but I still find humor in it. I miss my grandmother. Oh. All right. So we've talked about how politics can influence the market. Here's the bottom line. The influence of politics on market behavior cannot be underestimated. Politics shapes the economic landscape, and its impact reverberates through financial markets. From fiscal policies and government spending decisions to regulatory frameworks, monetary policies, and geopolitical events, political actions have direct and indirect consequences on market dynamics. Investors and market participants must closely monitor political developments, and anticipate potential shifts in order to make informed decisions. Now, I'm not talking about a 2-minute trade where you take 2 points out of the S&P and get your goal for the day. This is more of an investor type thing, okay? Because if you're just trading for your goal for the day, you just trade what's in front of you, and hopefully it doesn't take very long, and then you're done and you put the mouse away. Now, your investments, that's a big different picture. And that's where politics and geopolitical tension really play a much more important role than in a short-term trade. Investors and market participants must closely monitor political developments and anticipate potential shifts to make well-informed investment decisions. Understanding the complex interplay between politics and market behavior is essential for navigating the ever-evolving global financial landscape. What we've done is we've reduced all that complexity into a very simple set of indicators, very simple strategy, and we worked really hard over the years to make things as simple as we have. There's so much you don't need to learn about the markets in order to be a successful trader. In fact, to be a successful, consistently profitable trader, all you need to know is how to get your goal for the day. Which means you don't have to study a million different things. You don't need a million different indicators and oscillators. You simply need to understand how price flows, and it flows the same across all markets and all time frames. And so you're simply looking for a high probability, low risk trade opportunity. Grab your goal for the day, 2 points in the S&P, pays you $100 a contract. As you earn your way up the ladder to 10 contracts, those same 2 points are worth $1,000 a day. If $1,000 a day won't pay your bills, you probably need some kind of, intervention. I always forget his name, but Financial Peace University. He's a very popular, well-respected guy. He's got a radio show. Plays in most markets, most days. Now, why would somebody call me? I don't know. I guess maybe they want to get to know me. Anyway, let's get rolling. First stop, Logic 247. What's that? It's our 24/7 around-the-clock E-mini alert service. Futures trade around the clock. We have traders around the globe. Our day session is their night session. So the Logic 247 channel opens for business Sunday night at 6 p.m. Eastern and remains open through Friday afternoon at 5 p.m. Eastern. Since the markets opened this past Sunday night, we've issued a total of 41 alerts, 6 never triggered, still waiting on 2, 33 actionable alerts, of which 6 or 18% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple process we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. Over the last 255 weeks, we've issued over 14,000 We're almost at 14,500 individual handcrafted alerts. So we're starting to close in on 15,000. That's a lot of alerts. All individually handcrafted, and every one a trend trade. So if I included counter trend trades, we'd probably have twice that. A phone call. Hello, this message is for Rebecca. My name's Tracy. I don't know Rebecca or Tracy. And the caller ID said your name was Angelina. So, yeah, must be why the phone said scam likely. So, over 255 weeks, 14,500 individual handcrafted alerts. And what we've averaged is 20% or less of the alerts being stopped out based on the risk profile I just explained. The caveat is you never risk more than the potential profit in a trade. The maximum you ever risk is $300 per contract trade, less when possible. Now, there might be an alert that has $1,000 of potential profit or $2,000 of potential profit. Whether it's a long or a short, you just simply look at the entry price and the final trade to price, and that tells you what the potential profit is in the trade. But if you know you're going to get out at the initial target, which gives you your goal for the day, well, then that's all you risk. If you plan to hang around for the second target, then that's how much you risk, as long as it doesn't exceed $300 per contract per trade. So, I mean, an alert could have $2,000 of potential profit, but you still don't risk more than $300 per contract trade, less when possible based on market structure. And it's all really quite simple. Now, I want to show you something real quick. I don't normally get into this, but I'm gonna today for just a minute. I'm going to bring up, now everybody knows I use a 10-tick range chart, okay? But I know that Valerie does the recap on a 5-minute. Now, this morning there was an alert that said to go long soybeans at 15 bucks. At 15:02, that gives you your goal for the day. Okay? Now, in the recap, it's marked as a stop out because the first time it triggered, it didn't make it all the way to the target. But in the recap, it also says second trigger, full target. Okay? So, price came up, triggered the entry of 1500, but only went to, didn't even make it to 1501. Just barely triggered it, okay? However, we record whatever happens on the first trigger. Important prices, important areas are almost always tested. So, in the beginning of Logic 247, I actually attempted to track the multiple triggers, but we don't do that anymore. We stopped that long ago because it's just too time consuming, too confusing. You know, just get on to the next trade if you get stopped out. So, did the trade ultimately do exactly what we expected? Yep. Whenever you get stopped out on an alert, you should watch very closely when it re-triggers, because that's probably going to give you what you're looking for. Doesn't change the fact that you may have gotten stopped out, But important prices, important areas are almost always tested. So boom, boom. This is the important price, important area at this point, and took it out nicely. And if we were looking for something to trade, I would have to go to the 30-minute chart of the soybeans, well, which I can do. See, we're above the BBC, so we're only looking for long trades. If I drop down to my 10-tick range chart, 30-minute tells me I need to be looking for long trades. See how the green line's getting above the red bias line? And you see how we're flat across here on the slingshot? So if price gets above the BBC and gets above these highs, guess what's going to happen down here? This is going to turn blue and head up. Bias line. See how when price moved higher, see how the bias line turned green, right? Then as price started to come back down, the bias line turned red. Okay. So until the 30-minute chart gives me permission to trade short, was this a valid opportunity? Well, it's a counter trend trade. And again, while I might take a counter trend trade myself personally, in the Logic 247 channel, I only put trend trades. And trend trades are defined simply by this. If price on the 30-minute chart is above the BBC, the green line stands for bull bear cross. When price crosses below it, we're bearish, looking for lower prices. Price crosses above it, we're bullish, looking for higher prices. Leg, retrace, leg, retrace, leg, retrace, leg. Now we're in a retracement. Now, when price drops to the 30-minute BBC, we expect it to hold. Why? Because the pullback holds more often than it doesn't. Eventually, price will trade through the BBC. That keeps the markets fluid and tradable. So this was yesterday at 10 a.m. Eastern that we clearly got above. This candle here would either go for the day and then some. So then we pull back holds, we get a leg, the pullback holds, a leg, the pullback holds, leg, the pullback holds, and now we'll wait patiently for price to come down to the BBC. If it gets below it, okay, now on the 30-minute chart, look at the slingshot. It's already turned red. It's because of this. Now, indicators follow price. I know all these websites out there try to tell you that, you know, they got some indicator. They cooked up some indicator or oscillator that price follows. It's just ridiculous if you think about it. It makes for, you know, great ad copy and sales pitches. But every indicator and oscillator on planet Earth is a lagging indicator. It lags price. Period. I don't even need to go into any more detail because you guys are a very intelligent and well-versed audience. Now, you know where we stand on the Logic 247 alerts, but we still got our original alert service, concierge trade alerts. Now, these are different in a couple ways. They're based on historic price action, whereas Logic alerts are based on current price action. CTAs are based on historic price action. And when those two meet up, that's where you find some great high probability, low risk trade opportunities. My goal is to get the CTA report out It's a static report. It comes out once a day, shortly after the Globex Open. So last night at 6 p.m. Eastern, the markets reopened. They closed yesterday at 5 p.m. They reopened at 6 p.m. That was the beginning of the Wednesday session, even though it was still Tuesday night here in the U.S. So what do you do with the numbers once the report's published? Well, number one, only worry about the markets that you actually trade. We'll use the ES as an example. Go to the 30-minute chart and make note of where price was at the time the report was published. Then draw a line in the sand at the long target and a line in the sand at the short target. When we go to the charts, you'll see what my line in the sand looks like. You can make yours look any way you want. They serve as great visual cues to help you stay on the right side of the street. Now, once you've made note of where price was at this time, you've drawn your lines in the sand, then what? Price gets above the 30-minute BBC, it's trying to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's really that simple. You do have to look left to spot potential obstacles, previous swing highs or lows, which can become current support or resistance. And you learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC. It's trying to get to the zone overhead. If it's below the 30-minute BBC, it's trying to get to the zone below. As a lifetime member, after you've mastered the strategy and the indicators, you probably won't need the live training room every day. Some people like it just to have a place to hang out because trading can be a lonely business. But you will have lifetime access to the zones. And once you really get a grip on how price behaves at a weekly trading zone, they will become one of the most important tools in your trading toolbox. Now, that all sounds real simple. Here comes the hard part. Resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Okay? Now, because this broadcast is open to the public, if you're not a member or a trial member, you didn't get this report at 6:30 last night. So if you want to grab a screenshot, please do. Because we're going to walk through each and every individual market. Because that's what we do every day. We also start every day with the daily chart. You might say, I don't trade the S&P. Doesn't matter. Price flows the same across all markets and time frames. You might say, I don't trade the daily chart. Me either. However, I do look at the daily chart so that I know what the institutional traders are doing. We talked about this yesterday in depth. Institutional traders move price. Us retail traders, we don't move price. We can take advantage of price movements created by the institutions, but with our account size, we don't move price. These institutions have accounts in the hundreds of millions, billions. In the case of BlackRock, $9 trillion under management. So when they trade, price moves. Now, back last Friday, we put in a new high. Not an all-time historic high, but a new high. The downtrend bottom, I said we've been in a downtrend over a year. The low was put in October 13th. And so the fibs you see on the chart okay, are from the October 13th low to this past Friday's high at 44.9375. Now, what are these other numbers? Those are called fib extensions. Fibs are not proprietary. They're 13th century math. Institutions look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Do institutional traders use fibs? Yes. I mean, there may be some guy out there that just refuses for whatever reason, but pretty much, yeah. But remember now, they're looking at daily, weekly, and monthly charts. I'm not saying that fibs can't be valuable on a smaller time frame. Some people find them valuable on smaller time frames. I personally don't use them on smaller time frames, but that's just my personal preference. The reason I look at the daily chart is I want to see what the institutions are doing. Now, when we put in that high on Friday, and we closed red, Monday was a holiday. There's Tuesday, and here's today. Yesterday, we came off of that high, okay, which can also be called dark cloud cover. Some will argue that because the whole body's not red, it's not really dark cloud cover, but I don't argue over such things, so you can call it what you want. But it told me when the market closed Friday that we were heading back to the 50% fib extension. Now, I arrived at this extension simply by using the Fibonacci extension tool, which every platform has. I connected this important swing low to this swing high to this swing low that touched the BBC, and it projected into the future, places where the market would most likely find resistance. The retracements tell you where price might find support, right? But extensions are where you may find resistance. So as price was climbing, here's the 24 extension. Here's a 38. We see we hit it that day and then backed way off. Next day we got through and over 2 days made it to the 50. And then the next day we pulled all the way back to blue and climbing. And we closed right at the 50. And the following day we rallied up to the 62. See that little wick sticking above the red line at the 62% fib extension? And then on Friday, we spiked it, put in a new high, not an all-time high, but a new high, and we closed below the 62. It's just logical the price is going to drop to the 50. Now it's starting to look pretty logical that price is going to drop to the 38, unless buyers come in and turn this thing around. You'll notice the black line, which is called the step line, has now crossed from the left side of blue and climbing to the right side. When that happens, whether it's on a daily chart or a 30-minute chart, whether it's on Amazon or Walmart or Bitcoin or the British pound, when the step line crosses blue and climbing, that's an indication that price is going to try to pull back to the BBC. Price always reverts to the mean. In fact, I talked about this last Friday, and you can always go to the YouTube channel and check it out as we talked about it. I said, guys, this has been an awfully extended move, okay? Price pulls back to the BBC, and the pullback holds more often than not, okay? And then price trades through it and pulls back. Leg, retracement, leg, retracement. pullback holds, and then we trade through. Get a leg, a retracement, a leg, and a retracement, a leg, and a retracement, a leg, and a retracement. You get this huge leg. So I think that's the day I use the analogy of my friend George, who loved to go to the dog track and would say, I'm going to bet on this dog that's so far out of the money, it's just laughable. And I would say, George, why? Because he's due. He's lost the last 19 he came in dead last the last 19 times out. And George would go, exactly. He's due to win. That's some pretty flawed logic, but I said, using George's analogy, the George theory, I'll call it, we're due for a retracement. Price always reverts to the mean. Our mean just happens to be green, and we call it the BBC. When price is above it, we're bullish. Price is below it, we're bearish. Bullish, bearish, bullish, bearish, bullish. See that long extended move? Price always reverts to the mean. You will not find one spot on this chart. And we could go back to the inception of the markets. You won't find a spot where price did not revert to the mean. Okay? So, if we take out today's low, which is currently something. Oh wow, it won't give me the low 4403.5. Okay, if we take out 4403.5, then something like 43.99 down to 43.81, 38% fib retracement. Or is it 43? Yeah, 43. I guess it's 43.71. That'd be a really nice trade. Now, if you look at the low of this candle, that's potential support. The low of this candle, that's potential support. It's basically a double bottom right there. But then we hit the 38. Now, just as we found support when we dropped to the 50, when we drop to the 38, we'll probably find support. Perhaps enough even for a bounce back up to the 50. But eventually, we're going to come back to the BBC. Then the question becomes, will it hold or not? Well, it held, and it held. And this has been a very extended move. So, I would think the first time we touch it, we get a bounce. But we may trade through it because of a lot of things that are happening in the political realm right now. And we just spent 20 minutes discussing how politics can affect the financial markets. There's not much going on in the world of politics right now that would encourage investors to buy stocks. And these are futures. Just as I said, indicators follow price, not the other way around. Futures follow stocks. Because of the name futures, sometimes people think, well, stocks follow futures. No, 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 no. Futures follow buying and selling of stocks. Okay? So, by looking for just 2 minutes at the daily chart, we can identify where important resistance is, high of the day, important support, low of the day. But if we take out the low of the day, then we can see where the next area is, and the next area, right? And if the market were to reverse and head higher and take out the high of the session, we would know that the step line itself is potential resistance. Blue and climbing is potential resistance. The 62% fib is potential resistance. And Friday's high is potential resistance. If you're only looking at a tick chart or a range chart, or a 5-minute chart, you don't have any of this information. So, whatever market you trade, if you'll just spend 2 minutes with the daily chart of that market, that stock, that crypto, that forex pair, that ETF, and jot down the important prices and important areas. High of the day would be the first important resistance you'd write down. Low of the day would be the first important support you would jot down. So you can then, once you've jotted down these important numbers that you need on your little notepad, now you can jump to the 30-minute chart. Now, I execute my trades on a 10-tick range chart, but every alert, every trade I take is based on what's happening on the 30-minute chart. It's like my roadmap. You'll notice price has been below the BBC. Over here, if we go back, we had a bearish cross on June 16th. It's 5 days ago. 5 trading, 5 calendar days. Okay? When the red line crosses below the green line, that's called a bearish cross. So we got a leg and a retracement and a leg and a retracement. Now notice where the market found support at the zone. Once price gets below and pulls back up, then the zone becomes resistance. But the pullback to the BBC held, and it held, and it held, and it held, and it held. Price spiked the BBC, but it ran into the zone. When price drops to a zone, we expect support. When price rallies up to a zone, like it did here and here and here, we expect resistance. That never changes. Now, will price sometimes do this? Well, obviously it can, because it did. Now, if we go back far enough, we can figure out why. But I'll leave that to you. Now, here's where the market opened last night. This is the 6 to 6:30 candle. This is the 6:30 to 7 p.m. Eastern candle. It was at exactly 6:30 p.m. that I issued those targets. Okay. Now, price got above red and falling. So you might say, do I want to go long? Well, this candle opened at 36.5 and it ran up to 38.5. Gave you 2 points exactly. And that's goal for the day. Didn't even have to make it to the target. One candle right there. Boom. So then we just consolidate. Then price drops below the BBC. Blue and climbing, turns to red and falling. And this candle here opened at 32.5. And it dropped to the zone at 29. So again, more than your goal for the day. When the market finds support, it's going to go look for resistance, which it found at BBC. And then it rolls over and down we go. Now, only 3 things happen at a weekly zone. The most common thing, 70% of the time, is going to be this: consolidation. 20% of the time, rejection. See how when the 30-minute candle closed, the only thing left touching the zone was the wick. It's rejection. And then there's what we call the slice. When on the 30-minute chart, price slices through a zone like it's not even there. When that happens, and the slice runs out of steam, it will typically retrace back to the zone it sliced through, continue in the direction of the slice. There wasn't enough buying pressure to get it all the way back to the zone. So the zone is 28/29, and we made it back up to 27. So we missed what normally happens by 4 ticks. Okay. So down we go. Hit the retracement. Down we go. We hit the target. Okay. Very simple. Now, you might be cautious entering your trade. You know this could be potential support. This candle way over here opened at 44.22. Took you down to the target. Took you all the way down to 18.5. Full for the day. And then price pulls back to the BBC and the pullback holds. And now we find ourselves dropping again. Now, perfect stack. Price, step line, red and falling, BBC. But something has happened. See the step line crossed from the left side of red and falling to the right side? That's a signal that price is going to attempt to pull back to the BBC. And it did. Pullback held. It holds more often than not. But now what's happened? Okay. Because the step line crossed, red and falling has started to curve and get directly below price. So there's an extremely high probability. Now, red and falling is currently at 44.10. There's a high probability that that will be support. There's 15 minutes left in the life of this candle. You see, when that step line crosses, red and falling turns to blue and climbing, which is bullish. Okay. So right now, price is a little bit trapped. Got resistance overhead, potential support below. If price could trade below this low, would I trade 44.07 to 44.05? Yep, I would. Again, I think this support is probably going to drive us back to test the BBC again. Remember, price always reverts to the mean. Okay, the Dow opened here. Pull back to the BBC. The pullback holds. Then we get a drop. This candle opened at 34,330 and dropped 25 points. Takes 20 points in the Dow to get your goal for the day. And there you got it in one candle, without even hitting the target. And we pull back holds, and we drop. Okay. This candle opened and ran up. But then as this came back down, see, this was a green candle. But its price came back down and took out this low, and the open of this candle, it turned into a red candle. At which point, I'd be very eager to be short. At 34.2, what this candle opened at? 34.278. So at 34.270, let's go. 50 points to the target. And then some. A little gravy. Okay. 50 points at $5 a point, $250 per contract traded. If you've earned the right to trade 10 contracts, then it's $2,500. Same move. It's just a matter of how many contracts you've earned the right to trade. When you become a lifetime member, you don't start trading real money right away because you haven't learned the strategy yet or how to use the indicators. 2420 blueprint is going to walk you through a process of putting together 10 consecutive days in a row in your demo account before you get the green light to go live with one contract. Once you go live with one contract, now your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. The big difference between the first and second contract is the first contract is funded with your startup capital. That's whatever money you use to open your account with. But the second contract is added with profit you earn in the market. Blueprint's going to tell you when to add number 3, number 4, number 5, number 10. But you only add one at a time, and you only add with profit you earn in the market. Okay? Now, 2 points in the S&P is $100. 20 points in the Dow is $100. From 34,300 down to 34,280. That little smidge right there. It's 20 points. That's $100 per contract traded. But if you've earned the right to trade 10 contracts, it's $1,000. For $1,000 a day won't pay your bills. Get some financial counseling, as I said earlier. Okay? And also, don't put the cart before the horse. It's awkward for both. Hold on for me 1 second. All right. So now we're trapped between resistance at the BBC and support at blue and climbing. We've already hit the target. Now, if price can overcome the low of the current candle, then there's a great window of opportunity. Get below the low of that candle, down to the low of that candle. Again, that would give you your goal for the day. Russell. So the market opened last night. It was just congested, hugging the BBC. This is not, you don't want to trade this. Okay? Price drops to the zone where we expect support, and it was. And we rally up. And if we look left, we can see why price stopped where it did. Horizontal line of my cursor tells the story. This candle, we're above the BBC. We've got blue and climbing. This candle opens at 86.2 and rallies up to 90.2. 4 points, $50 a point, $200 per contract traded. Then price gets below the BBC, blue and climbing turns to red and falling. This candle slices through, but then what happens? It retraces to the zone it sliced through. And then what does it do? It continues in the direction of the slice all the way down to the target. This candle opened green, then turned red. The open of this candle was 1881.3. So let's say we get in at 1881. That's 6 points down to the target. $300 per contract traded, $3,000 once you've earned the right to trade 10 contracts. The blueprint not only will help you with knowing when to go live and when to add contracts, it will also help you write your business plan and your trading plan. 9 out of 10 new traders fail because they don't have someone to teach them how to do the job. They also don't have a business plan or a trading plan. Both are all three are incredibly important. Someone to teach you how to do the job. That's why we train for 2 hours every day. You need a business plan, the same as with any other business. And you need a trading plan. If you were going to open any kind of business and you went to the bank to say, or to some angel investor, said, hey, I've got this great idea for a new business. I need to borrow X amount of dollars. First, and I'm not suggesting you borrow money to start trading. I suggest you save money to start trading. But were you to go to a bank to open anything from a sandwich shop to a nightclub to a car wash, first thing the banker or investor is going to say is, okay, show me your business plan. You see, most new traders treat trading like gambling, and they get gambling results. The more you treat it like a business, the more it will behave like a business. And you have to behave like a business owner. Okay. All right. So the NQ opens, and we get this one little candle here that opens at 264, runs up to 273. It's $180 per contract traded. I wouldn't have messed with it though, personally. Then price gets below the BBC. You got red and falling. This candle opens at 248 and it drops to 224. It's about $480 per contract traded. We pull back to the BBC, find resistance. Now when we dropped to the zone, we found support. That's what we expect. And we pulled back and made another run at it. This time we managed to trade through it on the second candle, but then it pulled back. Remember the slice? Back to the zone, sliced through, continued in the direction of the slice. When it hit the zone, found support. Good enough for a bounce. Pretty good bounce. Over $400 per contract traded. And then we got below. Okay, now this candle sliced. What happened? We retraced to the zone we sliced through and continued lower. Crude oil. Here's where we opened. We're on the Q contract now. Here's where the market opened. Get above the BBC. Another slice. I've never seen so many slices in one day. Slice, retraced, back to the zone it sliced through. And then this candle here opened at 71.40, ran to 71.50. Gold for the day, $100. Another $100, another $100. Pull back, and you see how red and falling acts as resistance. So we consolidate, as we do 70% of the time, at the zone, and then price takes off. And if you want to be cautious and let price get above these previous swing highs, 71.80, 71 90 is your goal for the day. From 71.80 to 72.10, that's $410 per contract traded. And then it kept going. Consolidated. Step line is crossing. So what do we expect to happen? A pullback to the BBC. If the market finds support there, then we'll trade to the long side. Price trades through the BBC. This area right here where this bullish cross took place will most likely be good support. When you have a bullish cross that leads to an extended move, first time price returns to that area where the bullish cross happened will almost always be good support. Same is true of a bearish cross. Bullish cross is simply when the blue line crosses above the green line on the 30-minute chart. Goal, never a reason to think about the long target. We pull up, got red and falling. All I got to do is just get short. We didn't get short to the open of this candle, which was 46.3. It dropped to 42.1. It's about $400 per contract traded. Pull back to the BBC, pull back holds, and it holds, and it holds, and it holds. And then we get our drop to the target, and then we drop all the way to the zone. Spike it. Okay, that's the 9:30 opening candle on Wall Street. I do nothing between 9:30 and 10 a.m. Eastern. That's just my own personal preference. Michael starts trading as soon as a Wall Street session. I will trade anything, anytime, around the clock. But I will trade nothing from 9:30 a.m. to 10 a.m. And if there's important economic news at 10 a.m., then I don't trade anything till 10:30. I don't need a bunch of erratic volatility, stopping me out. I'm not saying I don't get stopped out. Of course, everybody who trades gets stopped out. But I want the market to be in its normal rhythm and flow before I enter a trade. Now, we closed above the BBC. We got blue and climbing below us, right? And so, if this candle closes green, still got 29 minutes. This candle closes green, then 1949 to 1950, that's a great window of opportunity. 1951 to 1953, it's a $200 window of opportunity per contract traded. You got to be patient. You got to be willing to wait. But why can't I just jump in now? Well, because the market may find resistance right there, or right there, or right there. Gotta wait. If you want to learn to trade, you gotta be willing to exercise patience and self-discipline. And if you know that's something you already struggle with, that's great, because we'll work on that as soon as we start our one-on-one mentoring sessions. Almost done. Silver. Market open. We're below the BBC. Blue and climbing, turns to red and falling, takes us all the way to the target. Pull back to the BBC, hit the target again. It only takes a 2-penny move in silver to reach your goal for the day. You got in up here at 23.15. By the time you hit the target at 23.10, that's 5 pennies. That's $250 per contract traded. But it gave you a whole lot more to work with. But once you have your goal for the day, you really should put the mouse away. Go do life. Go do what it is God created you for. Spending time staring at charts, that's not healthy. Or is it helpful? In the beginning, okay, you do need some screen time. But once you understand the methodology and the strategy, then staring at screens is a waste of time, number one, and it can actually harm you. I don't mean by the rays the screen emits. I mean, you got your goal for the day. So now you're going to sit and watch how many times you could have got stopped out. So you could have put your mouse away and walked out of the office filled with confidence. Now, that was a topic a couple weeks ago. Just scroll through on youtube.com/CFRN. One of the things a trader needs to be consistently profitable is confidence in what they're doing. So if you get your goal for the day and put the mouse away, you are filled with confidence, right? Come back the next day and you repeat the process. Come back the next day and repeat the process. Pretty soon you don't even remember the last time you didn't get your goal for the day. You're not going to always get it in one trade. If you're trying to get 2 points out of the S&P, what if it takes me 3 trades to get my goal for the day? That's fine. Now, taking commissions into consideration, if it takes you 10 trades to reach your goal for the day in the ES, and that's if you pay $5.85 per round turn. If it takes you 10 trades to get your 2 points for the day, you're still profitable after commissions. You're like, huh? Yeah, do the math. Do the math. One tick of profit in the ES pays $12.50. Commissions, $5.85 round turn. So one tick of profit actually makes you almost $6. I know you're not excited about making $6, but I'm just saying, if it takes 2 trades or 3 trades or 4 trades to get your goal for the day, put the mouse away, be filled with confidence. Tomorrow you might get it in 1 trade. It might take 10. You never know. Just got to keep trading until you get there. So we consolidated, wide-ranging. We overcame the zone. Price came back to the zone, continued in the direction, all that, blah, blah. So we hit the long target. There was room right here to get your goal for the day. Room here to get your goal for the day. And then we went from zone to zone. Well, first we went from zone to zone. Zone. Resistance, support. Support, support, support. Resistance, support. Support. Resistance, support. See how that works? Same thing every day, day after day. Watch the low of today. And if it's broken, you know where price is headed. It might not get there today. It might not get there tonight. You take out today's low. And by the time you and I talk tomorrow, we very well may be sitting at the 38% Fib extension, or possibly lower. To become a lifetime member, go to eminifuturestrading.com. Everything a trader needs, all under one roof, one low price. 9 out of 10 new traders fail because they don't have a teacher. If you want a fighting chance at becoming the 1 out of 10 who does succeed, you're going to need somebody to teach you how to do the job in an interactive environment. Along with 2 hours of group training every day, you have access to unlimited one-on-one private mentoring. The strategy that you learn is fluid across all markets and all time frames. The indicators that you own for life, fluid across all markets and all time frames. As a passport holder, you'll receive the Logic 247 alerts, the concierge trade alerts, be able to attend the members only workshop on Thursday night, all that and so much more. eminifuturestrading.com. If you have questions, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. Robert asked, can I transfer the CFRN indicators to Thinkorswim? No, sir. Our indicators do not run on the Thinkorswim platform. Let's wrap it up with a good word for the day. Yesterday, we talked about learning to say, I can, when the world says, can't. Today, we're going to begin a new topic. Refuse to live in fear. Part 1. 1 John 4:18. Fear involves torment. Think about it. You've had situations in your life where some suspicious looking letter shows up in your mailbox. You're gripped with fear. It's tormenting. Whatever's in the envelope's in the envelope. Just rip it open, read it, and trust God. Advice columnists and lenders received about 10,000 letters every month. This is back when people actually used pen and paper and envelopes and postage stamps. Some of you probably don't even know what that is, but yeah. It was our version of carving on cave walls. When asked to name the most common problem in her readers' lives, she said, fear. People are afraid of losing their health, their wealth, and their loved ones. People are afraid of life itself. If you allow it to, fear will control you. Fear involves torment. And until the power of fear is broken, it will keep tormenting you. When fear rules your life, you cannot enjoy anything you do. And you certainly can't enjoy God's blessings. Dr. Carolyn Leaf says that fear triggers more than 1,400 known physical and chemical responses and activates more than 30 different hormones and neurotransmitters. It's at the root of all our stress. When fear causes a chronic stress reaction in us, it actually marinates our body in chemicals that can be harmful in large amounts. This, of course, is terribly unhealthy and threatening to our physical well-being. The fear of not being accepted by others can make you develop a phony personality, stifling your true self and hiding who God made you to be. The fear of failure will prevent you from trying new things or stretching yourself to do more than you feel comfortable doing. The fear of the future can cause you not to enjoy your life today. Fear is a spirit, and it doesn't come from God. 2 Timothy 1:7 makes that quite clear. For God has not given us a spirit of fear, but of power and of love and of a sound mind. You must reject the spirit of fear. Every fearful thought, you must take that thought captive. Draw on God's power. Believe that He loves you unconditionally. And begin to exercise the sound mind He has given you. For today, refuse to live in fear. And then we'll talk about what to do tomorrow. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.